XEQT. This is the iShares Core Equity ETF portfolio. So before we get started, I just wanted to show you Canada Life's version of XEQT. This is the last place I worked at, and I used to call advisors idiots who recommended this product. Since Canada Life is an insurance company, they also have segregated funds with MERs up to 3.48. These advisors are stupid idiots. So let's take a look at XEQT. You left your advisor, but can you do better? Let's take a quick look at all the important information on the fund facts and some other metrics you probably want to take a look at. XEQT was made back in 2019. $11 billion of money have found a way to leave their advisor, but I'm going to show you a way how to beat this numbnuts product. You're going to get the price you want with a bid-ask spread of 0.04%. It has a very respectable MER at 0.2%. XEQT currently has 5 holdings, but this is a fund-to-fund product, so it has hundreds of stocks within it. This ETF moves just like the market with a 1.0 beta. This is a very passive ETF with only 3% turnover rate. The trailing 12-month yield is 1.88%, and you're going to get these distributions quarterly. The PE ratio is 17.85, the price to book is 2.64, the price to sales 2.11, the price to cash flow is 11.86, and it has a 5-year Sharpe ratio at 1.09. So how is XEQT built? It uses the 4 major asset classes: emerging markets, international, American, and Canadian, and it's just using its own products to build you a diversified portfolio. So let's move on to the MGN portfolio. The same allocations, but not having a bias, and taking a look at all the industry's ETFs. And the third portfolio is going to be InvestCan, DIY robo-advisor. Let the robot do all the work. The allocations are a little bit different, but we're going to test it out. See if the robot I made is going to robot or not. So investing $100,000 about 5 years ago, XEQT grew to $226,000. Not having a bias with your ETFs only grew a little higher at $227,000. And the robot grew to $247,000. XEQT had the worst compound annual growth rate, the highest standard deviation, the highest max drawdown, and the worst Sharpe ratio. So you learned how to click buy once, 4 more times. Historically, you'd have a better retirement. InvestCan. Download it.